Welcome back to the channel. All right, so today we have a lot of interesting stuff to go over. Once again, it has been a pretty turbulent week when it comes to Bitcoin and a lot of the assets that we're covering, but it's been interesting and there's been some news, so we're gonna go over it all. Before we start, make sure you like the video, make sure you subscribe to the YouTube channel. Feel free to check out my Twitch and Twitter links in the description. They're all there. And, let's go ahead and kick this off. Welcome back. So the first thing I want to start this off with is by telling you guys, I know that a lot of people have joined the crypto space within the last month or two. Now, if that's you, if you've just joined since like mid-March, all you've seen so far is Bitcoin going up and then going right back down to where it was when you joined. Now, keep in mind, this is a very, very common thing. But the thing to figure out here is how far do we think it's going to drop? Is this going to continue to drop? Is this going to recover at some point soon? And we're going to go over that today. We're going to look at some key levels that we think we should hit support on, and we should actually come up with some sort of timeline on when we see this recovery coming back, because it's actually taking a little bit longer than I even suspected it would. But I'm loving this because I've been able to pick up Bitcoin at great prices that last month I didn't think I'd get to see again. So the fact that it's come back down to this level and it's getting support here for the time being, it's very, very important, and in my opinion, a good place to accumulate and set lower orders in case it drops more. So let's go ahead and get started. We're going to kick this off by talking about one very important thing that came out in the news today. All right, so this is an article on CNBC, and what we're seeing here is that the Dow closed more than 300 points lower following reports. This is actually yesterday. Sorry, this was released yesterday. So we saw yesterday that Dow closed more than 300 points lower following reports of Biden eyeing capital gains tax hikes. Now, if you're in a country that doesn't have capital gains tax, basically what capital gains tax is here in the United States is a tax on your investment assets. Normally, you're going to see capital gains tax when you sell a home for a profit or when you sell stocks for a profit. Something that you're investing in, you sell that and you make something, you have to pay capital gains tax. If you lose money, then you can declare that as a capital loss. So let's say you have $5,000 in capital gains. So that's the total amount that you've earned in your investments this year. And then you lost $3,000. So that means that your total capital gain would become $2,000, right? You made $5,000, you lost $3,000. The total taxable amount is now $2,000. That's how much you earned. And you would have to pay a tax on that. For those earning above $1 million or more, currently their capital gains tax rate was 20%. So remember that, 20% was what they had to pay. Depending on your income bracket, how much money you're making per year, there are different capital gains tax rates. There's also different capital gains tax rates based on how long, or actually, I'm sorry, that's for income tax. For capital gains, it's based on how long you hold the investment. If you hold the investment for less than a year, you're paying more in capital gains. If you hold it for more than a year, you're paying less in capital gains. Okay, so that's pretty much the basic on how capital gains works. Now let's read these highlighted areas. It says Biden is planning a capital gains tax hike to as high as 43.4% for wealthy Americans. It says 39.6% for those earning $1 million or more. That's per year, up from 20% currently. Okay, look at that closely. That is saying that for people that are earning $1 million or more, currently they would pay about 20% in capital gains. That's looking to be increased to about 39.6%. That's roughly double. That's double the amount of taxes they would have to pay on capital gains. So theoretically, if they buy Bitcoin this year and they earn more than $1 million and then they sell it 2 years from now, they would have to pay 40% of the amount of that sale in capital gains tax to stay within the tax law and not risk going to jail for not paying their taxes. Now, Reuters and New York Times also matched these headlines. So it was initially reported by Bloomberg on Thursday. So maybe the dates are wrong here. It says Thursday afternoon. Today is Thursday. Weird. Excuse me. Sorry. So it also says here, Biden's proposal effectively doubles the capital gains tax rate on $1 million income earners. That's what we just said. It says now, this is the key thing, it says, expect selling this year if investors sense the proposal has a chance of becoming law next year. Remember, if it becomes law next year, then chances are it would be effective next year or effective the year after. So selling your assets this year, if you're a very high income earner, would mean that you would technically make more money unless you expect to earn 20% in the next year. So if that person is going to have to pay 20% less this year by selling, then they may just sell because they might not know, is it going to go up enough for it to be worth me holding this for another year? And that comes into play with homes. It comes into play with investment properties, houses. It comes into play with stocks. It comes into play with crypto. It kind of affects everything in the United States when it comes to investing. All right, so that's one thing that I wanted to go over. And now what we're going to see is around the time that this news got released, here is what we've seen with the price. The price has been dropping the last couple of days. So usually what ends up happening with news like this is, and I'm going to take this off the daily and put this in the 4-hour. Usually what ends up happening with news like this, I mean, a lot of people tend to think that, oh, once it hits the news, that's when everyone finds out. No, there are a lot of very wealthy people that have this information a few days, maybe even a week before it hits the news. It would make sense that if a lot of people knew this, that held big amounts of Bitcoin and other assets, and they were scared that the price was going to drop, they could have started selling. Now, I don't think that had anything to do with this first drop. I think this first drop was more related to Coinbase's Coinbase's direct listing and, some FUD that came out about the Coinbase shareholders selling a lot. And then also we saw that we started to have a little recovery and we started going down. I think this downtrend here is likely related to this capital gains tax news. Now, what does this mean effectively, right? Effectively, this means that what we're seeing here is, in a way, a redistribution of wealth. You tend to have a bunch of crypto holders, otherwise referred to as whales. These are people who hold lots of Bitcoin, lots of other cryptocurrencies, and they, in a sense, control a large percentage of the circulating supply. Now, if those people start selling and it's being bought up by retail traders, I mean, I hope a good amount of this was bought up by retail traders and not just institutions. I would definitely think that companies are buying Bitcoin right now at this discount. Big institutions are likely going to be releasing within the next few weeks that they bought this much Bitcoin when the price was at 52 or 55 or 57. So I think that that's going to be coming. But I'm also hoping for any of the whales that have been selling in these areas that we've had a lot of retail traders buying it up, because I definitely don't think this is the end. Mainstream media will have you believe that we could have reached the top and this might be turning for the top. I don't think that's the case, because I think that the overall implications of what's happening in the economy or that's a global economy, what's happening in the world, are going to impact how Bitcoin continues moving over the next year, over the next 2 to 3 years possibly. Now, keep in mind, why is capital gains being increased? The reason they're increasing capital gains is because they need money to pay for all these like social programs that they're printing money for and funding. The more money they're printing, they eventually have to pay that money back, right? They have to clear that debt in some way. They can't just keep creating debt forever. Theoretically, they could, but then you could reach hyperinflation, and that's very, very bad. You don't ever want to get to a point where you could hyperinflate your currency, because the economy could just come tumbling down. So in order to remedy this, they need to start collecting money to pay for all these things that they are doing where money is just being printed, and they want to keep printing money for these kind of things. How are they going to pay for it? They're going to tax people. They're going to collect more money. So if you think printing money is free, it's not free, because even if you're a crypto holder and you become a crypto millionaire, you invested in something, it goes up immensely, you're in the United States, well, chances are that when you decide to sell, if it's over $1 million, you're going to have to pay 40% in taxes at that time. So you're going to lose 40% of your gains. Now, keep in mind, that's a lot of money. You're talking about if you cash out, let's say you invested in some crypto early and you made $2 million on it, right? Or $1 million. If you make $1 million and you're selling it and you have to pay 40% in capital gains tax, that's $400,000. So that means for $2 million, it's $800,000. That's a lot of the money that you've earned. That money's just going to go right back to the government. It's going to be used to cover all of the money printing they're doing, essentially. Now, this can scare a lot of people because now they have another metric they have to perform with. I mean, theoretically, the CAGR, which is the compound annual growth rate for Bitcoin, it's not even theoretical. For the last 10 years, it's been about 200% per year. So if Bitcoin is increasing at a rate of 200% per year, and you have to pay 40% one time on whenever you sell, then technically owning Bitcoin still makes the most sense, right? At that point, it's almost better now with this news coming out. It's almost better in a way to earn or to own or buy Bitcoin than it is to buy real estate as an investment now. Because what are the odds that you're going to see enough of an increase in price to make a massive profit on your home if you're planning to invest in that home and sell it? Now, if you have passive income coming in, if you buy a home and you're renting it out, that's a different story. But if you're not doing that, then this could be significantly impacting your overall bottom line. What you want to be in is an asset that has an asymmetric upside, the chance to go up so high, so even if you're paying 40% in taxes at some point in your life on that sale, it's still worth doing it. And I'm not seeing any other option better than Bitcoin that's as stable as Bitcoin to do something like that. It has the best long-term use case. I mean, there are a lot of other cryptos that could potentially perform much better than Bitcoin over the next year or two. But the question is, are they going to perform better than Bitcoin over the next 10 years? And if they're not, then what you may be better off doing is buying some of these altcoins, making the quick profits on them if you're lucky, and then converting a percentage of them into Bitcoin, before that capital gains tax hike comes in, because you're still gonna have to pay capital gains when you sell those alts. So keep that in mind if you're in the United States. Very interesting stuff, and I think it has a lot to do with what we're seeing. Now, even though we've talked about 15, 20 minutes just on this capital gain stuff, it was very important, so I wanted to discuss it. Now we are going to go into the actual chart. Okay, so what we're seeing on the chart now is that we've been in this ascending triangle, or not even ascending triangle, but ascending wedge pattern for quite some time, right? We've been doing this since about February. We've been moving and bouncing in and out of these lines. Now we're starting to fall below it. So we need to see, where does this bottom really kick in? And nothing is confirmed yet, because all of these areas that we bottomed out on, we're actually moving, we're setting in higher lows. So if I zoom in here, what you'll see is that these areas that we're dropping to have actually started increasing. We're not dropping as far. And that's only in the last 2 4-hour candles, right? We need to keep an eye on this and see, does this keep trending up? If this keeps trending upwards, then that's a good sign, but there's no guarantee that we're gonna recover from this immediately. Now, I still think within 1 to 2 weeks, we'll see a recovery coming up. But in the meantime, what I'm doing is preparing to see where might be good places for me to buy some more if it keeps dropping, right? So what I'm looking at now are 2 zones, right? We have these 2 purple rectangles that you see on your screen. And basically what these are representing are areas of high volume. So you'll see that this area here, we've had massive volume as you start going back. Into this entire run, there was a lot of volume here. Now we're seeing, once again, a lot of volume here. It's a good thing to assume that we would want to stay within this triangle moving up. That puts us between about 53,200 and 57,300. That range is a good range to be in. Now we've fallen below that range, and the reason that this range here doesn't have a rectangle is because this is an area of low volume. So there's a lot less support here. So if we fall through this area, we have the possibility of going back to around 49K. Now 49K is the top of this zone down here, and here, and once again, a high volume area. So what I would expect to see is, if the price were to drop any further, what would seem the most logical to me, hang on a sec, let me get our brush on. Where is my brush? Why is my brush not showing up? This happened to me once before where the brush just disappeared. Maybe I'm just not seeing it. Hang on a second. Let me see if I can refresh this and find this stupid brush. Okay. All right, so we're going to get back to that in just a sec. There it is. Yeah, I don't know why that happens. Okay, so basically, if we do see a drop here, what I would be expecting is for the price to hit the top of this rectangle, maybe wick below it, and come back up, and then trade in this area where we don't have a lot of volume. before it goes back into this upper zone. Now, if this happens, I would say that this bottom line anywhere between 48 and 50K would be probably a wonderful place to buy, because I don't see it going much further. There's a lot of support here. We traded here for a long period of time, and it would more than likely be a great place for institutions to buy up Bitcoin. I know if I had a multi-billion-dollar company, I would be buying this entire time in small amounts, and I would not be pushing the price up. I would be letting the price go down as much as possible, and then when it hits these areas, I would be making huge orders to buy it all up. So that would be the most logical thing, because imagine you invest $100 million at these prices. When it goes back up to 60K, you've immediately made a massive profit. From here back up to 60K, that's like a 35% profit, right? That's, when you're talking about $100 million or $200 million, that's a lot of money. So expecting more purchases in these ranges is very, very possible. I would keep an eye on it. Make sure you look at the Bitcoin chart. The link is in the description of my YouTube video. You'll be able to monitor these zones and see how they play out. But right now, that's what I'm looking for. Time frame wise, I'm looking to see one of two things. Either we move back up into this top zone within the next 2 days, or we start going sideways. And going sideways in this area here, where it's in between the triangles or the rectangles, it's not the best thing, because that could tell us that possibly the price will come down and have to test the top of this zone. But it's also a good indication that you may want to set a buy order somewhere at around 49,500. In case it does drop, you can pick some up a little cheaper. But if it just starts trending up, the key is that it gets above this trend line. So we really need to break about 54,700. Once the price breaks above that blue trend line and holds it, then you know you're back in this ascending upward triangle. Now keep in mind, none of this is ever, no TA that you see is ever 100% going to happen. The goal of the TA is, in my opinion, is to figure out where you would want to buy or where you would want to sell. In my specific use case right now, I'm not looking to sell any Bitcoin, because I don't think this runs over. I'm looking to accumulate more. And if I'm going to accumulate more, I'm looking at figuring out the right targets to accumulate at. And right now I have a clear path, right? If I stay within this area here, more than likely we'll take a drop down to 49.5, which means I should be able to pick some up at around 49.5 or 40 or 50,000 even. If I can pick some up there and then I see an uptrend starting, I know for sure that we would hit resistance at the bottom of this zone and slowly start working our way up. Now, these levels also make a ton of sense. I'm going to show you one other thing before we move on, all right? I'm going to go to digitalik.net/BTC. So this is the stock to flow chart. If we look, I haven't brought this up in quite a while, but if we look at the stock to flow chart, I'm going to zoom in on the current area that we're trading in. If you look at the stock to flow chart for where we are right now, the price of Bitcoin as valued by the stock to flow is sitting at around 47,500. We are currently trading at 52,300. So even if this model continues to hold, and if we have something similar to what we did before, which in this case, we had a drop down to 30,400 when the model price was 29,300. If we have something similar to that, that means that in the next couple of days, the price is going to go by the 24th. So 2 days from now, let's go to the 25th. If you look at the, you're not actually seeing this. I don't know, for some reason it doesn't show. Oh, you know what? Hang on. Let me go to the full screen view. Let's see if you can see it now. Okay, now you can see the numbers. Okay, so if we look at these areas here, all right, let me zoom back down. So if you look at these areas on your screen, you're seeing here that where the price sits now, it's 52K, and the model price in blue is 47K, right? If I go to the right a couple of days, if you look at the bottom of the screen, you'll see the date there. Right now, it's at 4/22/2021. That's today. So if I move to the right a little bit, I can move by day. So now I'm looking at the 25th. You'll see by the 25th, the model price is around 48,400. So if we do continue to see a drop, seeing a drop to around 49,500, which is the level that we talked about, would put us immediately back to where we were here. And look what happened the last time we dipped down and touched the stock to flow level, right? That's when we started our uptrend and started moving up massively. So seeing this large consolidation, coming back down, resetting with stock to flow, and then starting our move up is also possible. Can we drop below the stock to flow? It's a possibility. You could always drop a little bit below it, but more than likely you'll start seeing buying pressure building up at those prices, and we're already seeing that. We're not seeing anything more than big wicks at these areas. Even the last one. Now, these wicks have been getting smaller, so what's really key to see is how does this capital gains news affect Bitcoin, because that's going to affect the rest of the market. All right, one other thing that I haven't gone over on this channel before is BTC Dominance. So BTC Dominance is showing us how Bitcoin is performing in comparison to the altcoins. All right, I'm going to go to the daily chart for this, and you'll see that BTC Dominance, the market cap dominance, has been dropping. It's been dropping back to where it was like in 2018. Right, to these 50% levels. Now, this is a good indication that you may start seeing altcoins see massive pumps. So I don't know which ones exactly are gonna have the pumps. There's so many of them, but seeing this happen is a very good sign that money will flow into altcoins. Now, one of two things could happen, right? If the dominance keeps dropping, then more money will flow into altcoins. But if this turns around and starts a massive rise up again, then you'll likely see the reverse. You'll likely see that, BTC dominance will go up and the other altcoins will go up very slowly, or they'll stay sideways for a little while BTC refreshes its price. So keep an eye on this. If you want to find this on TradingView, just look for the ticker BTC.D, and it should be titled Market Cap Dominance, and do a little bit of reading about it, because this can really help show you how Bitcoin is performing as far as market cap goes in comparison to the rest of the crypto markets. All right, so that is pretty much it for Bitcoin. I know that was a lot of news, but we're gonna move forward and we're gonna go straight to Ethereum. All right, let's go here. So Ethereum has actually been performing quite well. It's had a pretty decent recovery from where it was. In comparison to Bitcoin, it's been doing really well. And I'm actually gonna show you an indicator here for Bitcoin that's based off Ethereum. So we're gonna get to that in just a second. But basically what we're seeing here is that in the last, let's go to the 4-hour chart. In the last 24 hours, we're basically seeing that the price has gone to a new all-time high and now it's consolidating. So Ethereum's at an inflection point now where we need to decide where this consolidation is going to get support. At the moment, we haven't seen it. The MACD is starting to look slightly bearish. The MACD is saying that maybe the price could drop a little bit further. And like I've said, revisiting trend lines is always something that's possible. This trend line here has been accurate in many areas. And if we go back, it even hit down here. Now, this Fibonacci gives us a pretty accurate trend line. So if we were to come down, I would expect support at around 2,300 for Ethereum. And I would hope to see it find enough support there to either keep trading sideways or to start moving back up slowly. Now, that's just one possibility. There's no reason that Ethereum doesn't get support in any of these other areas. The MACD flips again, RSI flips again, and it keeps going up. All right, this has been a very parabolic move, so I would think it's time for a little bit of consolidation, some profit taking, especially given the capital gains news, and we'll see what happens. I mean, I'm also assuming that right now Grayscale is probably buying a lot more Ethereum as well. So keep that in mind for Ethereum. No real news for Ethereum other than the fact that it's been performing well, but the key level to look at is around 2,300. Do we hold 2,300 or do we go below it? If you go below 2,300, then your next major support is sitting back at 2,150, and seeing that type of up and down consolidation is not necessarily shocking, but I would expect that we don't go below this 2,150 level again, because that would also keep this uptrend that started here, right? So if we come back down and hit the green line or just above the green line, this uptrend would stay intact, and this trend line would then be our resistance level. So keep that in mind for Ethereum. No major news. Everything that I told you about Bitcoin kind of applies for everything else. All right, the next thing I'm going to show you is the Bitcoin Ethereum. This is called the Bitcoin and Ethereum scale. This is the percentage scale indicator. So I'm going to turn off all these other indicators. I'm going to hide this. All right, now what this does is this gives us a way to predict the price of Bitcoin. All right, I'm gonna go ahead and go back to the larger view here. Okay, so This prediction is something that I've been doing for a long time, and it's actually worked out to be pretty accurate. So I'm hoping it'll be accurate again. Let's go ahead and turn it on. So what you're seeing now is the prices have disappeared on the right, and we're looking at percentage moves. All right, in orange, you're seeing Ethereum, and then in the background, you're seeing Bitcoin. Now, if I zoom out, what you really want to do is give this a longer time frame. So you want to zoom out a bit, and you want to get to a point where the prices kind of match as much as possible. So, apologize, allergies are getting me today. So you'll see here, this is a decent way to look at this. What this is showing me is that the prices have been very, very similar in this range. And then Bitcoin shot up. What happened to Ethereum? Ethereum came and caught back up to Bitcoin on the percentage scale. Then they traded together. Ethereum shot up and kept trading upwards. Bitcoin fell way below, but then Bitcoin shot up and it caught up to the percentage scale. Then they traded together again, and now they've deviated one more time. They've deviated big time now. So now you have Ethereum much higher on the percentage scale, and you have Bitcoin much lower on the percentage scale. So I would always be a little bit conservative with this. I'm not going to say Bitcoin is just going to go all the way up and catch up, but I'm going to say that it's going to start moving up, or Ethereum is going to start moving down. One of the two things is going to happen where these two meet in the same percentage scale again, because historically, if you look over the course of 1 to 2 years, this continues to happen. So I would assume that this is going to continue to happen. Personally, I do think it is a possibility that Ethereum stays consolidating in this area up here where it is now, and Bitcoin starts its move up, and then they meet somewhere in this area. So we'll do both, okay? We will first look at what happens if Bitcoin just goes all the way up and catches up to Ethereum on the percentage scale. That's one metric. The next metric is, what if Ethereum goes down a bit more while Bitcoin goes up, and then they meet in the middle? So if that happens, we're looking at the price to do something like this, okay? This will give us a minimum and a maximum. We're looking somewhere in the middle. Okay, now those are our two areas that we're looking at just very briefly by looking at this chart. What we're going to do now is we're going to go into our indicators. We're going to get rid of the percentage scale. That's going to take us back to the prices for Bitcoin. And now we can look at what prices these are. So this shows us that for these types of moves to occur, the medium move, so just for them to meet in the middle, Bitcoin would have to hit 70K. For Bitcoin to catch up to Ethereum on the percentage scale, which it has shown to do every time. Ethereum always catches up to Bitcoin, or Bitcoin always catches us to Ethereum. They've been trading in tandem for a very long time when it comes to percentages. To get that high top to catch up to where it is now, that would push Bitcoin all the way up to 82K. So I would expect within the next few weeks to a month at the most, we will see Bitcoin trading somewhere between 70,000 and 83,000, unless Ethereum takes a massive nosedive. And, you know, in that case, then you may see Ethereum come back down to somewhere below 2,000, maybe around 1,700. I think that's a lot less likely because of the fact that people are going to need investment assets like this. And Bitcoin and Ethereum right now are the best performing ones when you look at an overall market cap to performance ratio. So this is pretty important. We'll keep these on just so we have them. We can always look at these later. I'll turn the rest of the indicators back on. But these are basically what I'm looking at for just very basic predictions, right? Bitcoin needs to make these kind of moves. And in order to make these moves, the only way it doesn't make these moves is if that correlation suddenly disappears. And that's never happened, right? That correlation has been there for the longest time. I don't think it's just going to suddenly disappear. But okay, let's go ahead and wrap up with Bitcoin and Ethereum now, and we're going to move on to EGLD. All right, so with EGLD, we have some other interesting stuff going on here. EGLD has come back into this area here between about 167 and 198. That's kind of where it's been trading. Now, why is this so important? Well, it's important for two reasons. All right, number one, it is trading exactly at our Fibonacci levels. That's one thing. I haven't modified this Fibonacci retracement since we created it, and we created this Fibonacci retracement before the drop. So that means that this Fibonacci retracement not only gave us our bottom targets here, right, at this green line at around 166. I think in my last video I said buying between 155 and 165 would be a good place to buy, and that was a good place to buy, right? But now we are seeing a good amount of support at this area here, and we are seeing resistance at the top of this area. We've seen it twice, Okay, even here we fell below it a little bit, but we came back, hit the top again, came back, hit the bottom. This type of up and down bouncing trading is clear to show us that A, we are in an area that we're building massive support, and B, we are in an area that we likely will move up from. It's going to be unlikely to see the price drop a lot further from here, and the reason for that is that it's being bought up so fast and the price is not going back down below a certain level. If we see the price drop below around 150, that's when I would worry for a little bit more downside. And right now, we're not seeing that. Seeing it go to like 151, 152, 153, that I'm not worried about. But trading below the trading like anywhere from 140 to 145 would be a little worrisome, because if we go back to that area, what you'll see is that that's the area that we really want to hold, right? We have the most support sitting from 130 to 150. So we don't want to go below 150 and then start dropping, right? The key is to hold that level now. All right, maybe going down around 152 to 155, that's not too bad, because we would put in some support in this area that doesn't really have volume support sitting there. But I don't even want to see the price go back there. I would prefer that the price stays on this yellow trend line that we've been following for some time. So let's go back and zoom out a little and show you that yellow trend line. Okay, so basically what we would do is we would get rid of the fib retracement. So this yellow trend line is the one that we created a few videos ago. And so far, that's also been playing out very accurate. We've been holding this trend line and we've continued to move within it. So that's what we want to hold. Down here, this rectangle is one that we created a couple months ago, or like a month ago. This is where we have our massive support zone. So expect us to get a lot of support at 150. It's right at the top of this support zone. We traded here and consolidated here for a very long time. It's unlikely that we're going to drop below this. If we trade within it, we do not want to see the price drop below this rectangle. That is not a good sign. So seeing the price stay above 155 to 165 now and keep trending sideways or upwards is good. Even if we see it go like this and to the right and then drop a bit more, and go up. This is really good, because this is still holding an uptrend, right? You still have low, higher low, higher low, higher low. So seeing that uptrend hold is really good. Whether we go below the line or not so important, but maintaining the uptrend, pretty important. So my buy levels for EGLD right now are sitting at around 150. We have a lot of good news coming out with EGLD, the Maiar exchange. We have a lot of work being done with staking. I'm starting to see that not a lot of people are unstaking even during the drops. The staking numbers seem to be rising. And on top of that, if people want to stake now, it's becoming increasingly difficult. All the spaces seem to be filled. You still see so if you're trying to stake and you're having a tough time doing it because you can't find any spots, you just need to check multiple times a day. Because basically what happens is 10 days ago, someone might have unstaked, and those unstakings happen throughout the day. And as that happens, you'll have maybe a window of opportunity to stake some of your EGLD. So keep that in mind. You should have a chance to do it still. A lot of people say nobody can stake anymore. That's not the case. You just have to check it every hour and a half, and look at which pools have opened up for a little bit, because some of them will, but they all get filled up very quickly. So if you're not on top of it, then you may not get to stake. But if you stay on top of it and keep refreshing it and keep checking it, you'll get your money staked. And keep in mind, I think that at a certain point in time, it is going to fill up. It's not happened yet because it's still early in the process. So this is a good time to decide which stake pool you want to monitor and get your money in there for EGLD. Okay, so EGLD overall, honestly, it's looking good. As long as it keeps this uptrend going, it's looking good. Nothing has changed from where we were down here. If we go all the way back, this is a massive upwards consolidation. This is a really good thing to see because we are making price moves. And if we move up again from here, like we did previously, we consolidate in this range, we get support, and we move back up, then we would likely set a new high somewhere around 275 before we move back down into this range and keep moving, assuming that this trend holds. So as long as this long-term trend holds, I'm fine, because the chances are that we're going to reach a point, maybe in a month, maybe in 2 months, when we're down here and we're going to break out of this thing. And when we break out of this thing, it is going to be a monster breakout. So that's kind of the long-term goal, and you got to keep those long-term goals in mind, because once that happens, you don't have the opportunity to buy at these prices anymore. So do your research, decide if it's a project for you, and if it is, make your decision soon. I mean, this is a very symmetrical chart, and symmetrical charts tend to play out the way that these patterns show us. And right now what this pattern is showing me is that we are in an uptrend. As long as that uptrend continues, we're looking good. And then as we start reaching an area where the uptrend is getting narrower and narrower and narrower and the pressure starts to build, we're likely going to break out of it. And then we might go back into this larger uptrend where the price would have to hit around 350 to 400. Makes sense, you know, it's undervalued. I'd look to see it going that way. All right, so we have done EGLD. We are going to wrap things up with ADA. Goodness, I wanted this to be a short video. We're at 40 minutes. Ugh, every time. Okay, so we are now looking at our friend Cardano. Now, Cardano has been quite possibly one of the most stable assets for the last few months. It has, I mean, I know this looks like, oh, what are you talking about? That's not stable. It's been going up and down. Well, it has been going up and down, but it has gone up and down within a pretty narrow range between about $1.08 and $1.45. I know that's a big percentage range, but to see the price hold so well between these levels is really, really good. And with Cardano now, I'm starting to feel like Cardano is getting undervalued as well. This drop that Cardano had, whoever got to buy Cardano at around $1, consider yourself lucky, because I don't think it's ever going to drop much further than $1. If you look at this in a long term, this is still following a very massive Fibonacci uptrend. We are just starting to go below that uptrend, but we are not below it far enough that we don't consolidate for a little while and just break back up into this area and then move right into the 160s, 170s. You know, if you saw a line like this in a month and Cardano starts trading around $1.80, close to $2, this would seem like a very logical uptrend. I mean, look at how this compares with the current price movement, right? It would seem a lot more logical for a bullish project to do that than for the market to suddenly decide that, hey, Cardano, one of the top cryptocurrencies, is now going to take a dive. You know, I don't think that that's going to happen, not yet. But I do think that when the bear market hits, whether that's a year from now or 3 years from now, you need to be careful of assets with massive supplies, and Cardano is one of them. The key is going to be to see how does Cardano staking get people involved. And right now, I think it's doing pretty well, because even during these drops, it doesn't faze me. My Cardano has been staked for 6 months. I'm not touching it, because the way that I see it is long term, this is still an uptrend, and it's a pretty massive uptrend, and I don't think it's done. You know, I don't think it's done at all. And this isn't scaring me, because all it's doing, if we look at this on a closer time frame, is putting in such a heavy support level here that when the price does start trading in this range and building up support here, it's going to be very unlikely that we ever drop below $1.25 again, or even, yeah, like $1.22. Setting $1.22 bottom when you're sitting at 118, and that's feasible in the next month or two, that's amazing. So that means our current trading level could become a bottom in about a month. And if that happens, then the price should very well be above this red line, which is going to be at around $1.50 or higher, most likely above $1.55, because that was our last all-time high. And I think it's going to trend up and continue doing that, because even our upwards trend is moving in that direction. So keep it in mind. We are still seeing the death crosses on almost every single asset. We're seeing the blue moving average cross below everything else. I wouldn't be super worried about this. These are more important if they continue very, very long term. So seeing these death crosses continue for another, you know, few months or so would be a little bit more concerning. But seeing them now during a time where we've had a bunch of, you know, tough news and all of that, it's not super shocking. So just keep an eye on them, though, because they usually do come with downwards price movement, and we've seen that. But we need to keep an eye on how they're going to be reacting to what happens next in the market. I'm trying to see if there's anything else that's important for me to mention, because with ADA, I mean, the stability is what really kills the TA, right? Because we're not gaining a lot more information. We keep coming down to the same levels and expecting support there. We're getting support there. So, you know, this entire zone for... We'll wrap it up with this, actually. This entire zone for Cardano, if we draw this here, this entire zone does not worry me. If it's trading between anywhere from 112, let's go back and draw that one more time. So this zone here, if you're trading between $1.12 and $1.25, I'm not worried about it. If it starts dropping below this zone and then falls below $1.07, that's when you worry about it a little bit, because that could be an indication that it's really making a turn to the downtrend. It could be going back to like 90 cents or 80 cents. But no indication of that just yet. It's still in its massive support zone, and it's holding it well, and it's trending up. So Cardano's looking good. Probably a little bit better than a lot of the other assets performance-wise right now. You know, unless it starts dropping below this green line. 107 is key for Cardano right now. If it starts dropping below 107, then you need to watch the price closely. If it holds 107, 105, it's okay for now. RSI is looking great, so when the uptrend does start, I would expect Cardano to go right back up to 135, 140. That's about it for Cardano, and that is everything for today. I hope you guys enjoyed this. I apologize that it took so long, but we had a lot to talk about, and I know people are very concerned with what's going on. Keep an eye on the news, see how things are going. You know, figure out for you if these are opportunities to buy, if you just want to hold, you're too unsure of what's going to happen. You got to make your own judgments. You got to use the information I'm giving you as a tool. Don't use it as a, you know, as a means to an end. Like, you shouldn't be making all your decisions based on what I'm saying. You should be using this to help you make other decisions. And it looks like BTC is dropping a bit right now. So let's just keep this in the background as we wrap up. Okay, so we are going to get back with another video probably tomorrow, and we'll see how this plays out over the next 24 hours, since it's a little bit of an important time right now. We'll also likely do another video on Monday. So if for any reason I'm not able to do a video tomorrow, then you'll see me again on Monday. And keep following me on Twitter. I'll give you any updates I can on Twitter on what I'm seeing on the charts of the market, because I'll keep looking at them. And one thing I'm seeing now is that Bitcoin is going heavily into the oversold territory. So that means that the selling is pushing the price back down to these levels below 70 on the RSI, and that's usually a technical bottom, right? So we'll see. We'll have to see how far it goes. Like I said, expect massive support for Bitcoin at 49.5. So this may be a good time to set some orders there. I think I might do that myself. Okay, that's everything, you guys. I hope you enjoyed this. Make sure you like, make sure you subscribe, make sure you comment. Let me know if you think this was useful. Some people tend to like the longer videos. Some people like the shorter videos. It really depends. But when there's a lot of information, I'm going to give you whatever I can. You can come back and watch it at your own time. Make sure you follow me on Twitter for any updates over the weekend. And make sure you follow me on Twitch, where I do a Q&A after every live stream. What you're watching right now was first streamed live on Twitch. So you could have seen this video a few hours earlier and maybe use some of the information quicker. So anyways, that's about it. Like, comment, subscribe. See you next time. Have a wonderful day. Peace. Stop streaming. Oh no!